So until we do the extra work, if it means to put in 1 extra hour a day, add on 30 minutes. But forego some of the things you used to enjoy. For at least do this for 1 year and you'll see changes. Now, some people have been seeing changes just after like 1 or 2 months, 2 weeks. So we've been hosting these meetings. And what if now we continue like that? You continue like that with that self-push for a year or two. Man, people have used these same techniques and they are making money. The whole of the European economy, the whole of the US are using the same technique. They have been trading for years. All big companies that you see, they Meta, Facebook, Apple, all the tech companies, all companies you see and you admire to be part of. Google itself, go on the stock market, go on New York Stock Exchange, you will see how they are performing. People are investing in such companies each and every day. But what happens to Africans? You ask someone, you tell someone to invest, they will ask you, how much have you got? How much have you done what? So if you fear to invest, just know you will stay like that. Trust me. If you fear to take risk, if you fear to jump into the water, you'll never find out how deep the well or that water will go. You get. So whatever we do, we don't know what the future holds. But how do we prepare for the unknown? It's by doing these things. Man, there are a lot of things we can trade. Yeah? There are a lot of things we can trade. People are trading currencies. People are trading uh, futures. Yeah? And they are making money at the comfort of their home. But it does not just come like that. You have to do the work. And the work is not difficult. If people, we've studied for 16 years, high school only minus campus, 16 years. The 3 for kindergarten plus the 7 for primary, those are 10. Now plus 4 of O level, those are 14 years straight, plus 2 of A level. Those are what? 16 years straight. And you come out of that, you complete those 16 years, and again you don't know what you're going to be, what you're going to do in this world. But you've been investing since childhood, you and your guardian or your parents. But you've been investing in such what? Ventures. Your parents maybe they are thinking maybe this will help you in the future. But they have been investing money, medication, accommodation, food, plus tuition itself. And then someone comes out of all that those 16 years and they can't do anything. And then they have to add on 3 or 4 or 5 if you're going for medical studies. But again, you tell someone, come on, we study this. It's only 1 year or two. And then someone starts questioning you. Man, you've been investing in education and up to now, you've never returned any coin to your parents. You've never returned any coin. You're also still struggling, still figuring out things. You wake up, go to town, come back. You look for jobs. You've started your degree, someone is offering you 300K a month. Just imagine. You've started for 16 plus now 3. Uh, those are 19 years straight. And then you come out of the 19 years investment and someone is offering you 300K or 450 a month. and he wants you full time. But you remember, in your primary, someone somewhere, or your teacher, or be it your parent, asked you a question, what do you want to be? And then you are like, I want to be a doctor, I want to be a pilot, I want to be this, I want to be this. But now here we are. If the same person came back and asked you or checked on you said you wanted to be a doctor or a pilot. Tell us, and you will start. Now you see now life now the moment you mention life, you just know that this is the real one, real life. But away from all that chaos, man, we have a lot of opportunities, that are given to us. The mere fact that you have life, you can breathe in and out today at this time. Just know things are still possible. Things are still possible. These things are not difficult. If you figure them out over years, then you also can. The only problem you have, people are greedy, and these are the things that we started with. The four things: greed, greed, fear of missing out. You have that fear. You're like, man, now it's moving. You want to jump in, but without any narrative, without any laid foundation, without a reason for you want to jump onto a trap. You get, and then when the trap overturns like this for a few seconds, you run. You say things are not working. You get. That's how people invest blindly. You invest in a business you don't know. They tell you today because now you've made some money from your job. They have paid you your salary for maybe 900, 800, 500, 400. You're even the first one in your family to get some such money, to make such money. And then you someone calls you and then he's like, man, you know that if you put money, if you invested in this and this, you can get a lot of money. People are making money out of chapats, out of mobile money. Now, because you started working without any goal, and you started all your 16 years, all your 20 years, or 19 years studying, you have no goals in life. You bring your money, you be like, you put it there. You get your kid, or you invest it into borders, and they told you borders are what? Can bring back your money, chap chap. What happens after a month or two? The border crashes or makes an accident, or anything happens. Or maybe the kid that you put on a stall of mobile money, on a stall of chapats, the kid runs back to the village with what? With all your investment, with all your capital. And then all that money dies like that. And again you don't learn from such what? Mistakes. And again some other guy comes up next year, tells you that boutiques are now making money, or salons. You invest, but you know that you're not going to be there. You just dump your money and you pay rent 4 months straight. Money goes like that. That's how Ugandans have been. And actually, research shows that Uganda is one of the countries that has a lot of entrepreneurs. People who are starting up businesses, a lot of startups each and every month. But again, on the other hand, it has the biggest percentage of startups that fail within the 3 months of incubation. 3 months, the business is normal. Someone will tell you, man, things were not moving. But what do you mean we are not moving? You didn't put in time. You are not there for your business. You expected to drop money there and then it starts generating other to yield what? Results. Things don't work like that in real life. Even God himself doesn't work like that. So for you expect to come onto charts because you've seen the $V posing on cars, showing you what fancy stuff. Now the other greed kicks in. You're like, man, I need to make this money. But you all know these things take time. These things require some knowledge. And the reason why you're entering where you're entering, and for you just put your money blind because now you've seen uh, your trader, maybe your mate or anyone in the group has posted a sell or buy here, sell or buy here. And for you, because you're like, man, this is the right time to milk the market, and you don't even put a stop loss. And then the thing runs for like a few seconds and then it overturns, and then you cry. That shows that you don't know what you're doing, but because of peer pressure, because of the society that is around you, they are pushing a certain agenda for you just follow. Like people who look like politicians. And we're going this side, you follow for. And when you lose your life, when you go there and then the police starts tear gassing you, you come back crying. Then you start hating the government. And then when they ask you how much do you have no one knows you. Bob Wine will never know you. Like Bestie will never know, even Seven will never know you unless you're someone. But how do you become someone? By having an agenda, by having targets in life. People, you have to have goals. If I ask each and every one of among us here, what are your goals in life? What are your goals this year? Where did you write them? Give me a list of at least 10 goals. I want to do this. I want to learn swimming. I want to learn how to drive. I want to get that driving permit. I want to work on my national ID. You have nothing. You're just where the society takes you or the wind takes you, it's where you go. And you wonder why things are not working. You get. So people, we need to change our mentality. We need to change how we do things. That's it. Even though we sit here and then teach you how precise, how the market works, we do these things together. And you don't do that. You don't change your mindset. You don't have goals. You don't have targets. You don't know why you're even here. And because there is a free course and you have internet, you have a phone and you're free, you just join. But you have no targets. We give assignments and you don't do anything because you have no targets in life. But you show up. And at the end of the program, nothing will change. But trust me, out of the 20, 30 people here, or 100 and what in the group, even though two people find something valuable in this thing and then they use it to their advantage, that will be a success for us. Actually, that's what we pray for. If we can touch two people or one and we change those people's one lives, man, that's what I pray for. These things to work for only one person. Maybe that person will change where their family with this. If at all these things work for you, then you can add on to your income, your daily income. You at least make like $5 or $10 with reason, consistently. You can make a loss or make losses. But when you continuously do this for a year, eh, that money can do a lot for you or for your loved ones. That's what we pray for. This is the year of change. All right, so uh, thank you for coming. This is going to be our 60 what? 60 what episode. So allow me to ask Calvin to pray for us like within 1 minute, then we go to what I prepared for you guys. Alvin, Alvin.
Yes, yes, we.
Yes, an opening prayer we start on the presentation. I've talked a lot, like within 60 seconds. Thank you.
All right. Now let's. Mighty Father, we thank you for the gift of life. We thank you for each and everything you've done for us. We do not take it for granted that we are alive today, Lord Father. You've given us knowledge, wisdom, and understanding to make today another day that we are going to understand whichever things they are going to teach. We thank you for the mentors that have taught today, Shadrach in the morning and Mr. Will in the evening, and I personally for the live session that went well for those that were there. Lord Father, we thank you for the concepts that you've given us. We thank you for this family, and we pray that we always stand there and seek out for each other always. In the mighty name of Jesus Christ, we pray.
Amen. Thank you very much, Alvin.
You're welcome.
I hope you can see what the what the data, the information you have displayed. Can you all see it? Hello, can you all see it? Yes, as a guy is saying it, you can't see it. Okay, so let's start. All right, thank you. All right, so we've been seeing these things. We've talked about structure shifts. We've talked about redelivery. We've talked about gaps and why they matter. At the beginning, we mentioned two things where price will attack. We said it will attack gaps or highs and lows, higher highs or all the highs and all the lows. The gaps are also quite important in this lecture. And we've seen fair value gaps, and we've seen why they are called fair value gaps. And I took it even further for you guys and divided the gap into two. Showed you the premium and discount. I hope you remember that. It's here. The premium and discount. And we went into the charts yesterday and saw this. And good enough people have been trying to do what? To screenshot their assignments. Now all this is because of one or two things. Remember the algorithm that is playing all is manipulating, sorry, is delivering this price action that you see on the chart, and its task or its major important, sorry, main target is to provide or to offer fair value in the marketplace on both the buying and the things have to be 50-50. They have to balance for the sellers and for the buyers in the marketplace. But whenever you see price shooting up, rushing quickly towards a certain level, just know it has left gaps. It has not catered for. If it rushes shooting higher, that means it's bullish. But it's rushing, you see big candles jumping around, going up with momentum. Just know those levels that have been skipped. That have been skipped are what? Are what we call imbalances. Now, if we are rushing upwards, such levels are called what? Bullish imbalance, buy side imbalance, sell side inefficiency. Now, what do we expect and why should we expect this? Because the algorithm is meant to offer fair value or a 50 by 50 chance on both sides. We expect it to return back to such levels. If it was shooting up, that means the market has been bullish. It was in a hurry to do something up there, maybe attack certain key highs. We expect it to come back because it was made to do that. We are not just anticipating things. No, the algorithm was made to offer fair value. The market has to be balanced 50 by 50. You get. and such gaps will be revisited. That's why we'll be sure that at least these gaps will be revisited. Now, when, when and how will they be revisited? The when, that is now time. They can be revisited today, tomorrow, or in the next minute, or even next year. You get? But trust me, they will be revisited because of the underlying rule in the algorithm. Okay. Now, the algorithm is designed to offer fair value to both sides of the market, sell side and buy side. In some cases, price will rush upwards, leaving gaps. Market operates at fair value. This will be the mid price between the discount and premium. This is what I'm talking about. This one. Market operates at fair value, that 50%. I'll give you an example. The market will always reprice back towards the equilibrium. Equilibrium is the midpoint, that 50%. Uh, since equilibrium is fair value towards highest and lowest prices to offer buy side delivery to areas where we've only had sell side. It is how I explained this. Okay, now the market is like a coin which has two sides. That's why I'm saying 50 chance of what? Of every side. Which side and which side? The buy side and the sell side. So it's like a coin. When you toss a coin, you expect two things. People who did some probability at high school in math, you remember this. When you toss a coin, you have two chances to happen, and that is one out of two. So you either see heads on top or tails. That's what we expect. Now that is what exactly the market is made for. It has to make sure that this side, the sellers are, are fairly have been favored as well as the buyers. How does it maintain that? Now, in cases you see gaps happening, those fair value gaps, what? Just know the market was in a rush to do what? To attack something somewhere. Now, how do we relate that to this example of a coin? This is whereby maybe you're tossing a coin, eh? You and your colleague, your friend. You toss for the first time and the head shows up. And you toss for the second time, again head shows up. And for the third time, again head shows up. Hmm? And for the fourth time, again head shows up. Now what happens to people? Because of greed, they think even the fifth time heads will show up. So they place their bet and then they don't put stop loss. Thinking maybe if the heads are bullish, heads maybe if we compare heads to be bullish and then tails to be bearish. That means if you toss the coin, if the market has been tossing the coin and we only see bullishness, we the coin maybe we are only seeing what? Heads only. You will think that the market is going to continuously dip. You'll be like, there's a saying that not every day is a Sunday, something like that. And for you think, I yesterday we were dipping, even today, even like that. You continue selling for without any narrative or any reason in the back at the back behind your what? Your entry. So what is going to happen? Because of the other mechanism that was built, the rule, the protocols of the algorithm to offer fair value. Now we've seen four heads showing up on the coin. What is going to happen to the market, to the algorithm? Is going to make sure that the four imbalances that were left, that means in our example, people on the edge side have been winning eight four times during the toss of the coin. The algorithm is going to make sure, because it was built into it, that the four ends are balanced. Now we need to see tails. You get? But it's not going to be direct that now it's going to now again change eight 4 times to balance up. No, it doesn't happen like that. It will maybe give you eight like times two. It drops in a what? A tail. Gives you like tails times three. It drops in a what? A head, like that, until it balances up before closure of the day, or before closure of the week, or before closure of the month, or before closure of the quarter of the year, or the entire year. So just know we have a 50-50 balance, but what does that an algorithm? Now, since we've known that, I was giving an example. There was an experiment that was done some time back on trading. Hmm? They gave people who didn't know anything to do with trading money an account of $100, 100 pesos to trade. It's like you get a baby, you be like, at this time you press buy, you press whichever button you want. It's like you're gambling. And what happened at the end of the year? The account was still standing. You get, they didn't blew the account and they didn't know anything. Like each day, you just wake up, you place either buy or sell. At the end of the year, with that study, the account was still ranging at that same amount. You get, and why is that? Because of the algorithm that was designed to offer fair, to distribute fairly. So no cheating, just no, you can't cheat the market. Anyway, enough of that. Let me continue. I hope this example makes sense for you now. Now, we use the same knowledge to go to search gaps and then divide them into premium, discount. The upper quadrant, we say we call it a premium quadrant. The lower one, we call it a discount. You get the 50-50 chance. Now, if this is how we use this. It's not guaranteed, and we'll see why. If you expect price to continue upwards, what do you want to see? Is a purge in this gap. We need to say candle passing through this what? This gap, this fair value gap. And when price passes through this gap and closes above it, this fair value gap changes the name to what? To an inverse fair value gap. It's inverted, in other words. I hope you note that. Now, we expect price to reverse or reprice lower, tapping where if it is to continue upwards, to tap into the premium what? Level, the upper quadrant. You get, and it continues shooting up. Now, what do we consider here? Because the candle has two things. It has a body and a wick. We expect the bodies. We want to see bodies. Only bodies play around the premium if we are to continue upwards. Mainly. But the wicks are free to wick into the discount level. You get. Also, on the other hand, like an example I'm going to show you that happened yesterday. We will see in most cases, or in some cases, we will see bodies wicking into the discount level and price will continue shooting up. This will happen. You get. So don't be surprised if you see something like that. And it will happen and it's fine, very fine. But it's like saying something that is like off the book, that is like accurate. Yeah? This is what we expect. But if you see a body is now crossing to the discount, don't close your trade. You just know that it is part of the game. Now, there are just no prices offering you, but you're buying at a very low discount. You're purchasing low price, you're buying stuff at a lower price and hoping to sell them at a higher price. You get. So that is what it's like, the last chance. It's like if you've gone into the market and a mango is like 1k, one mango, 1000 at premium, and then someone tells you that you can now if you wait a little bit, the waiting now, that's when you see candles going up and down, coming back to almost tap into your stop loss. And you wait here, I'm bringing for you at a cheaper price. You get, you wait, you're like, man, why this guy is lying? Why this guy, I gave him my money, it's like he promised, but I don't know, man. He might be a con man or something like that. And he's over Mofere. You're like, you call your colleagues, like, man, your colleagues tell you, man, go wait there. And maybe somehow, somewhere, the guy comes back with a basket of mangoes at 500, 500 each. You get, and then you're happy. So that's when you will see price all candles dumping into the discount level. You get, but those are like uh, really critical conditions. You're like, you've been waiting. You don't know whether the guy cheated on you or is going to deliver. You get, it's like black market stuff. Okay, so let's continue. All right, so we saw that. Now, if you're marking these imbalances, the volume imbalances, please use the bodies. Don't mind about the wicks, use the bodies. There's a saying that bodies tell the story and then wicks do the damage. You remember, you make sure you note that. Bodies tell the story and then the wicks do the damage. Don't forget that. So a gap is whereby you don't see any wick in that space. It's just a void. There's nothing. I gave you an example here that such gaps, such voids, such imbalances indicate that no transaction would happen at that time. The time continuously rolled, but nothing happened. And I gave you a simple example, people. You you set up a meeting with someone. You tell them that on on this and this on Monday we meet in the market. I sell you my phone. You come, make sure you come with my money. You reach there, the guy doesn't show up, and maybe comes back the following day on Tuesday. Shows up on Tuesday. He's like, man, I got some problems. Now that is the gap that was left. Now the transaction then happens on the following day. So these are the voids. You are supposed to meet, but nothing happened. You get. Okay. So we saw the three candle patterns, the swing high, swing low. We say the swing high is that candle in the middle on top of the two candles. The candle on the left is lower, and on the candle on the right is also slightly lower than that candle. So that candle in between qualifies to be called a swing high. A swing low is the candle at the bottom, but slightly lower than the two candles. So the two candles on the left and on the right are slightly higher than the candle in the middle. We call it a swing low. We'll see how these ones come into play. Okay. So we have AMD. This one, Alvin has emphasized it a lot of times. So everything starts with a consolidation. Consolidation is that up and down movement of the market price. In other words, the price is ranging. The algorithm is trying to consolidate, to accumulate. It's building up, yeah? And it can run for some good time. Now, here, if the holds price in a range, allowing liquidity to build up and above, up and down the consolidation range. I made some errors in typing. In the form of buy stops and sell stops below. Now below the consolidation, these lower lows that you see in that range, we call them sell stops. And on top or above the consolidation, we call those buy stops. I hope you recall these terminologies. Sell stops, those are the ones lower of the consolidation, of the accumulation phase. Buy stops, that's the level you mark on top, like a roof of that consolidation. We call them buy stops. Mhm. Now, if the meaning I'm talking about the algorithm, the interbank price delivery algorithm, will then reprice above the consolidation range, triggering what? Buy stops, taking out all the buy stops into active, making them active into the market. This is known as manipulation. The moment you see a run, a rush higher, please don't chase that. And it will sweep all the highs, the buy stops. We call that a manipulation leg. And it's in most cases it's quick, like 1, 2, 3 candles, boom. People who maybe thought the market was going to do otherwise and maybe their stop losses are up here and they will be taken out. And then they are thinking, now the market is in a rush to continue higher, and then they buy. What happens? They put their stop losses below the consolidation or where we labeled sell stops. What happens? Since this was a manipulation can be called a Judas swing. You've heard of that term. So smart money will pair liquidity from the willing buyers or the buy stops with short positions and then offload this position to willing sellers below the consolidation range. This goes back to offering fair value. The moment they take out buyers, they expect also sellers to be catered for, so market will reverse. Note, this whole process is part of the algorithm market efficiency logic, where smart money will sell off to buyers and then buy back from the sellers and vice versa. And this repeats over and over again, today, tomorrow, next year, every time, every day. I repeat this for you. This whole process is part of the algorithm's what? Market efficiency logic, where smart money will sell off to buyers, you sell to buyers, and then you again come back, you the same person, you buy back from those sellers, sorry, from those buyers, and then you get, and then you repeat that, you repeat that. So they are always to determine when and where. There are ways to determine when and where these processes like to happen. And we've tested this. That's why you've been seeing, you've been talking about sessions. Like you have the Asia, you have the London, you have the New York, and we've seen how this thing play around. If New York consolidates, what do you expect? What do you expect for London to do? London come in and manipulate a little bit. So now that is where and when. Now you know when these things are supposed to happen. During the sessions, you know that we have 3 sessions. We have New York. New York anyway is divided into two, but you will know that the moment I see uh, accumulation during Asia, I anticipate London to do what? To take out the accumulated, either the buy stops or the sell stops. The moment they take out sell stops, I just know maybe we are going to reverse in New York. You get. So that is your expectation, and you know when. When you know when London starts at 2:30, and you know when it ends at 7, and you know when London ends like so, New York kicks in, stuff like that. All right. So allow me to skip this of the PDRAs, and we will return back to this. But the PDRAs, just know these are data points. PDRAs include your fair value gaps, mitigation blocks, breakup blocks, order blocks, rejection blocks, all the high, all lows. All those are what? PDRAs. And those are data points. When I talk about data points, just know those are targets for the algorithm you get, and we all divide those data points into two, into premium and discount. So let me just continue. And you know, when we talk about support and resistance, we know premium should support, discount should resist. All right. Now this is our guide, the order block. You've heard of order blocks before. Now, how does it happen? Okay, I hope people you're listening. You show me a thumbs up. We've been so silent. Show me a thumbs up. Yeah, Simon. Yeah, thank you. So that means we are still on. Let me hope no one is dozing off. All right, let's continue with order blocks. An order block is a down in a bullish manner. If we say that is a bullish order block. Bullish means price has to go up upwards. But the candle uh, that led price to continue upwards, that last candle that whereby price reversed and continued upwards, that is what we refer to as a bullish order block. How does it happen? A down close candle, those are the candles that are sloping down, that are bearish. The black candles or the red candles on your charts, those ones that are sloping down, those are the ones we call bearish candles. So we will use the terminology down close candles. A down close candle or consecutive down, or a group of down close candles like 3 or 4, whatever, that runs sell side liquidity. Now, what is sell side liquidity? When you see lower lows being created, lower lows, that is sell side liquidity. You remember on the first example here of AMD, when you see a consolidation, just know that is a build up. The algorithm is now doing what? Accumulating buys and lows, highs and lows, highs and lows in a range. So the tops are what we call buy stops, the bottoms are what we call sell stops. Now, the moment you see price taking out the sell stops, or a candle that runs and takes out the sell side liquidity, what do we expect now to happen? That down close candle, that candle that slopes and takes out the previous level. If this was a lower low and then a new lower low is created, but here we're looking at a candle per candle. That candle that takes out the previous candle, that now those candles were sloping down. That candle that was doing what? Sloping down. We call it a down close candle. The moment that candle runs sell side liquidity, takes it out. And then it comes into play, it taps a point of interest or some level, like maybe a fair value gap on a higher time frame, like on a 15-minute, and then you go back into 1 minute and there is a candle that sloped down and then tapped into that gap, into that level. What do we expect? We want to see that down close candle becomes how does it become a valid order block? We want to see another up close candle and a green candle taking out its high. The moment another candle comes and then closes above it, or a group of candles, they go up, and then they close above this candle, it automatically qualifies to be called an order block. You get? So the moment you see, step one is this candle takes out the previous liquidity. Which liquidity? Sell side. If it is going to be called a bullish order block, then what we want to wait? We want to wait and see, is that candle that has taken out the previous liquidity, sell side liquidity, or all the lows, has it been also taken out by another upward movement? The moment we see other candles coming in and closing above its high, or it's opening its high, that candle automatically changes the name to what? To an order block. Which order block? A bullish order block. Now, a higher quality order block will have an FVG directly above its displacement. Now, the moment you see a small FVG, a BC, and a buy side inefficiency, imbalance, sell side inefficiency, just know that that order block is going to be strong. Now, what do you do? The way we did, the same way we labeled what fair value gaps. It's the same analogy you use on this on the order block. Now, you expect price to come back at that order block, but where if it's to continue upward, shooting up, you bisect you mark the high of that order block and the low of that order block, and then you mark the mean threshold, the 50% level. So in other words, you cut it into two pieces, the 50% lower and the 50% upward. You get. Now for the premium level, you expect price to come back and tap into that and then continue. In other words, the premium or the upper quadrant has to offer support for price to continue upwards. You get. All right. We continue. Now, if the order block is valid and we are in a bullish market, we should see a reaction from the order block data points. What are the data points? These are the ones that you've marked: high, mid threshold, and the low point of that order block. And the algorithm will reprice higher. Higher probability order blocks will generally be found around equilibrium level or 50% of the consolidation range. You get. Now, on the right hand side, I illustrated for you these levels, these data points where you expect price to tap and then continue. So you don't need to wait for price to again come down here in the lower quadrant, because in most cases it doesn't. It just stops at that upper level and continues. Any questions so far, people? With other blocks? Yeah, you can ask. Yes, Riga. Yeah, you're welcome. Sorry? What? What? How do I differentiate swing low with normal lows? How do I differentiate a swing low or swing high from other usual lows and highs? Highs and lows. A swing low or a swing high? A swing high is a candle that, let me take back this. We are going to go to trading and find out these things. But it's simple. Just know a candle to qualify to be called a swing high or a swing low. If it's a swing high, you want to see a candle in the middle of three candles being a little bit higher. And then the candle on the left and on the right, they are lower. It's like getting someone tall. And then you get two other short people. And then put them on the left hand side of that person and on the right hand side. So they make a kind of a pyramid. You get. So that is what we call that is what we call a swing high. This one. You just get someone who is tall out of your friends, then you get other two small or short people. Put them on the left and on the right. And that person in the middle who is taller than the two becomes a swing high. Then on the other hand, it's the opposite now for it to be called a swing low. So you just get that person who is taller, now short. Now you change the analogy now, who is short, and then put like a table, and then make two people stand on the left on that table, while this one is standing on the floor, on the ground. But then bring a table or a desk and then make people stand on top of that desk on the side, and then put this guy who is standing on the floor in the middle. That person becomes a swing low because it's right on at the bottom, and then these ones are slightly up, elevated. Okay, yeah, it's clear now. I think those are the thumbs up from Riga. Then we've seen a bullish order block. People, a bullish order block. I'm not going to show you how a bearish order block works, but it's the opposite of this. We've said a candle that sweeps previous sell side liquidity. Sell side means that you've seen lower lows, lower lows, lower lows, and then eventually the market has to reverse maybe to continue. It has been offering sell side sell side delivery. It has been delivering lower, and then now it's changing route. How do we know? When we see the previous old blow taken out, and then that candle that takes out that old blow is also taken out by its high, is also covered by another candle that maybe tries to go up. What do we expect? That candle is what we call an order block. We mark its high and middle part and its low point. We label uh, those gaps. What do we expect? We expect price to come back there and then continue upwards. But then another block to be like high quality. Like you expect it to work. This is what you want to see. You the moment you see a slight fair value gap, just know that is a high key order blow. Now you expect price to come back and kiss that upper quadrant and then continue upwards. But in most cases, it will come and also tap into the lower gap. All the wicks will tap, but we want to see bodies mainly do what? Stop up here and then reverses. So now let me show you the chart of yesterday afternoon, and we try to apply all these things and we see. Let me see where I put it. I hope you people are getting all these. We're trying to use the simplest language and examples in real life to relate to these things. If you have any questions, please you're free to ask before we do what? Before we continue. Before we continue. Okay, there is this chart. Let me drop it here for you. So any questions as I bring in this yesterday's price charts? Any questions, people? Yes. Yes, Tommy, you can ask.
Yes, my question is,
Yes.
When you're determining an order block,
Yes.
is it supposed to be like is it supposed to be from what?
From like a bullish.
Yeah, from a bullish.
No, it can be a bearish, like that. A bullish order block is the one that makes price to continue upwards, but it's a candle that is supposed to go to continue lower. In other words, if we have black and green candles, it's a black candles. If you have red and green candles, it's a red candle. It's meant to be bearish. But again, it's that candle that price now will stop to continue lower, and then it changes route to do what? To shoot upwards. That is the candle that we call a bullish order block. For a bearish order block is the candle that price was going up, 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 and then it changes, and then now slopes down. That candle, it's a bullish candle. It will be a green candle, but in this case, it's the last candle that made price to do what? To drop. You get? We call it an order block. In other words, in simple terms, it's a candle that, if it is a bullish order block, in this case, in the example we have here, it's that candle that made price to change direction. That made, if it is a bullish, it's a down close candle that made, it's a bearish candle that made price to go up. The last one.
Okay. So you mean it will be on the lower lows?
Yeah, normally it's on the lower lows. Yeah.
Okay.
Let me see if I can add in this PDF. I took screenshots of yesterday. There's someone who was asking in the what? How do I add the screenshot? Okay, I'm trying to add this. Let me see. I took 3 screenshots, but I'm trying to drop them here for you. Okay, I think this will work. Let's see. Let me know if you can see that. Yeah, now I want you to first look critical at that price action. That was yesterday's afternoon before closure, before New York closed. That is the chart. That is the last price action. Now on my chart, the candles that are meant to slope down, those are the black ones. Those are the bearish candles. The candles that are meant to go up, I change the color from green to gray. So I want you to observe those candles and see if you can see something before we start doing what? Breaking things out. What can you see? We were seeing price continuing lower. It was running lower, 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 formulating lower lows, then higher, higher low, lower low, then change and then shoot up and then stopped. I think you can, if you really see this, you can see something that you know now. Now I want you to see these lows here at 13:30 and 13:45 and 14. This is 2 o'clock, 2 in the afternoon, and 1 p.m. to 1:30 to 2. There are 2 lows that were created. I don't know whether you can see this. Annotation, document property. How do I have annotations? I don't know whether you can see these points here below, where price now shoot upwards and then it dropped, taking out these 2 lower lows. Now we call this, where you see that line, that gray line, we call these all equal lows, almost equal lows, relatively equal lows, these ones, where you see my cursor. I hope you can see the cursor now. Please show me the thumbs up if you can see the cursor. Yes. I've tried to make it bigger. Now those lows that are almost equal, if we draw a straight line, they can sit on that straight line. We call them relatively equal lows. Those relatively equal lows, they are meant to be swept out at any time. These ones here. Now what happened? Price came and dropped and took out these two relatively equal lows. Now look, which candle took out those relatively equal lows? A big gap. You see, this is what I was talking about. Price will rush and drop like 1, 2, boom, down. But leaving what? Gaps. Now this is a fair value gap. This is a 1 minute what? Chart. You can see that fair value gap. Now what we expect is price to come back in that gap and continue lower if it's going to continue lower. But now again something is created as price tries to kiss in that gap to continue lower. It created another two what? You can see this down here. That low and that low. Those are two relatively equal lows. They are the same like here. And what happens to such relatively equal lows or equal highs? They will be swept out. Now what happens later? Price comes and takes them out here and then shoots up. But now there is this gap, this fair value gap, then there is this candle here. Let me see if I can zoom in for you. There is this candle here that led price to do what? To drop slightly. You see that candle? That one. That is a swing high. There is a candle, this black candle on the left, that candle in the middle that shoot up, then another candle, a black candle on the right. They are lower than this candle. Sorry. They are lower than this what? This candle. What do we expect to see here? Here. Now, how does this candle become an order block? In other words, this is a bearish order block. The moment they close below it, the moment you see price closing below it, just know it's going to push price lower. Now you mark that it's high and low. What? They have closed below it and then price comes back and then continues and then takes out this. Now you mark that. Now price comes back and then drops. There is a gap here. These are all gaps, imbalances. Price drops and then we see it doing what? Shooting upwards. To which level? To this gap here. Now let me go here because there is no way I can do what? Mark those levels on a PDF here. Now there is this is the same chart where I entered yesterday. Now you see I marked that gap on the left on the 5-minute chart, and then I also labeled what? Labeled that up close candle that led price to drop down. And in the moment price kissed into the upper quadrant of that candle, I just bought. I just placed my what? My entry. But now there are things that I'm not going to discuss here that happened. The trade reached in the mean threshold of this range and then dropped again back here to this gap. So if you change this graph to each time frame to 5-minute or 3-minute, you see that gap, these candles. It came back there and then continued up to what? To a bearish order block. You see where my TP is. It's at, you see that candle that made price drop lower, and then there is a gap. We say another block is strong. Whenever they take it out, it's taken out, and then a gap or a fair value gap is formulated. It becomes more stronger. You get? This is what happened here. This is this candle here. I put the TP at its lowest point, anticipating price to come and reach that level, and price reached there eventually. There's someone who took the same trade and his chart was showing price reached up here. So now this is the chart, like this is another entry in another cycle. So you can see here this order block again working, and then on the opposite there's a gap. That fair value gap on the 1 minute, it's actually larger, and then price shoot upwards. It just continued up, but it took a lot of time here. It played a lot, which I didn't like. Okay, any questions, people? Any questions? So this is today's chart. This is the price action. Now you see price sloping. Let's try to put the things that we've been discussing into this chart. Let me go to trading view. Let me zoom in for you. Let me go to 5 minutes maybe for you. Now let's first mark order blocks, leave alone the gaps. The gaps now you know. Now let's see. Let's start with a bearish order block. Let me get a box. Order blocks are going to give you issues, I'm telling you, but you just bear with us. Now, you see this candle, that's a swing high. That's a swing high. You can see that candle. That one that I've marked with a yellowish what hue, orange, whatever. That's a swing high. Why is it a swing high? There is a candle on the left that is lower and a candle on the right that is also lower. So we call it a swing high. But how is it now acting as an order block? We've said this is a bullish candle, an up close candle. The moment they take out its low, you can see that here. You can see this black candle came and closed below its what? Its low point here. We mark it, it changes the name to, it becomes an order block. In other words, the candle that pushed price lower. Now we do what? We divide it into two. We get our fib, we divide it into two. Like so. Now the lower quadrant is what we call the discount. The discount. The upper one, you know, it's what we call the premium. Of that. That is the low, the high. This candle, you can see it's weak. It closed below this candle. Now price continued low. What do we expect? We want to see another candle comes back and taps into the lower one. If we are anticipating price to continue lower into the discount, what happened? You can see this black candle. It stopped right here. In other words, it just even wicked into that gap. It shoot up. Again, we said order blocks, it can be one candle or a consecutive, like a number of candles. Now, since price is fractal, let's mark this. Let's first leave that swing. Let's mark from here. This is an entire order block. From there up to there. That is an entire order block. What do you expect? What do you want to see? Price to do what? To drop lower and then do what? Close below its lower point. If it's a bullish, so if it is to qualify to be called a bearish order block, we want to see price dropping lower below its low point. If it is a bullish candle order block, we want to see price do what? Take out its high top, its higher point. Now, since this is a bearish order block, the bearish order block is the order block that pushes price lower. It can be a group of order like candles or one candle. Now, you can see that is like one candle, maybe if we went to the 15 minutes. Now, we want to see price candles close below its lower point. Which candle did that? This candle. Closed below what? It's what? It's lower point. And then what we want to see? If another candle creates a gap, creates a what? A gap. What is a gap? It's an FVG. This one here. That order block becomes a what? Becomes a really what? A really strong what? Order block. Now what do we expect is for price to come back where? In the discount of that order block. When? At a certain time. It doesn't have to happen like that. And then price will continue shooting lower. This is why we don't chase price. Now you're going to note that price, after formulating this fair value gap, this is a fair value FVG. Price just continued down. Chap, it just continued distributing lower. You don't chase, never try to enter here yourselves and put your stop. It can be taken out. Now we wait for price to come back where? In the discount. That discount also, again, there is a fair value gap. What happened? Price came back where? In that discount. Of what? Of this order block. And it did what? It dropped. Targeting what? Now what do you target? You remember, price will always target two things. Lower lows, higher highs, or gaps. Now there is a gap here, so you mark that. You mark that, even mark these levels. Or even the bodies, whatever you want. I hope this makes sense, people. Now also, this is also another order block that pushed price high, this one. These candles, the black candles, these ones. If we are to mark them, these ones will become the bullish order blocks that pushed price, that was sloping down and made it go up. How do they do that? We're saying for a candle or candles, a group of candles to act as an order block, we expect price candles for it first of all to take out what? Sell side liquidity. What is this? What is that? Hey, there is someone who's saying they are not seeing the presentation. Yeah, I don't see.
That one happens. Yesterday I wasn't seen, but it's always the internet connection. You use the
Oh,
internet connection, the presentation is turned off and it just
oh,
goes
sorry
disconnect.
about that. But anyway, you can always, it's good enough we're recording this, you go back on, we'll put it on YouTube for you to review. You get. So just know these lives like consume a lot of power from your phones, and within like 30 minutes the phone has heated up, and it will shut down all stuff like that, or even the network. You know the network of Uganda, stuff like that. Okay. So this is another block that did what? That pushed what? Price higher. Let me get my arrow. Okay. This is another block. You mark the high of it and then the lower part of it. The moment you see candles closing above it here, where you see this chaos, this is our, let me write here. It becomes a bullish order block. How? If you see it doing what first, if you see those candles, the black candles sweeping out all the lows, eh? What are the old lows? Those are what we call sell side liquidity. You've seen market has been doing these higher, lower lows, doing these ladders, sloping. The moment you see candles taking out these levels, you mark those levels. That is sell side liquidity, this one here. Sell side liquidity. They can be relatively equal or stuff like that. That one. The moment you see candles taking it out, and then those candles that have taken it out, the down close candles, the bearish candles that have taken out this sell side liquidity, and again they also take them out. It's like you take out someone and then they also take you out. They close above their highs. What is the high of that candle? The order blow. It's this one here. High of the order blow. This one here. The low of the order block is here. Low of the order block. It's there. Now you mark those levels and you divide that thing into two. The moment you see candles 1, 2, 3, 4. The fourth candle took out this. After taking it out, price started consolidating. You can see that chaos. Now what do you want to see? Two things. You want to see, let me first remove this. You want to see this order block. You divide that candle into another block. Now the moment you see a gap, a fair value gap formulated, where is that fair value gap? Here, you can see that gap. Now this becomes a really strong order block. That one, you mark it. That one. That becomes a really strong order block. That is the gap. That is the and where does it happen? In the upper quadrant. That is the FVG. So you divide this order block into two sections, the upper quadrant and then the lower quadrant, which is bearish. Now, we don't want price to come back in the lower quadrant to push up. We want it to play around the top quadrant and then continue upwards. So your entries will be around this area. You get. Now, either you can see how many times price came back. Now you can think that maybe you are sloping down. This is the first time that black candle price kissed into the premium of this this order block for the first time. Then the second time, then it pretended as if it was going to shoot up. The third time, that is like the last chance for people to enter. After that, boom, high, attacking what? Levels this side, higher highs. So you put your TP where? Up to these levels, levels, levels. Now there is a gap here. There is also another order block here. So you put your TP up there or up there like that. You get. But this is a really nice move. So you have a lot of things in play. You have one order block, you have a fair value gap, and then price shoots up. Again, on top, when price is changing, another order block is formulated. When that order block is formulated, how do we call that order block? Sorry, that becomes a bearish. Why do we call it a bearish order block? Because it's a bullish candle that pushed price lower, so it becomes a bearish order block. We want to see if on the case of a bullish order block, we expect to see price take out its high. On the case of a bearish order block, we see the opposite. We want to see the opposite. Its lower point, the low of that order block being taken out with a candle, with bearish candles. And if they take out its low, and then an FVG is formulated, just know that is a powerful order block. What do you expect to see? You want to see the discount to act as resistance for price to come back and bounce off into that discount to continue lower. What happened? Price rushed down and then came back and kissed into that discount part and continued lower. Targeting what? Targeting this order block. And there are FVGs here. So what do you want to see? Price again to play around here and maybe change. You get? Hey. Hey. People, any questions? Any questions? Yes, Mulindo. Adrian.
Sir, I'm very sorry. Sorry, I've been having some network issues. So I
Yeah.
haven't understood that thing of the three, as in there are three candlesticks that are huge, and you have called all the three order blocks.
No.
Can you request to do for me that part?
Now to take you back on order blocks, we're saying an order block can be one candle, or it can be can be a pair or a group of candles. You get? Why are we saying consecutive candles or a set of candles to qualify as an order block? It's because of a point I talked about at the beginning of this week, that market is fractal. Whatever happens on the higher time frame happens on the lower time frame. Now, these two candles you're seeing, your three candles, when we got down on a 3-minute chart or a 1-minute time frame, the three candles or the two candles on what? If it's one candle, like one bullish candle on a 5-minute chart, if you went lower into lower time frames like 1 minute, there will be 5 candles. You get? Let's try that. That's why we're saying now in this case, this one here. Here I didn't mark these. Let me first remove all this chaos. Let me just delete all this for you. remove all the drawing. This is our chart. And what time frame are we in? 5 minutes. You get 5 minutes. 5 minutes means what? Each candle, each candle that you see is 5 minutes. It takes it 5 minutes to print. You get? That's what we mean. That is the time frame we are in. Now, what do you want? Candles to qualify to be called order blocks, they have to do one thing. If they are to push price upwards, what do you want to see? Bearish candles that were meant to slope down to be taken out, each high to be taken out. When each high level is taken out, you want to see price coming back to it and then continue. Now, it can be one candle, it can be a group of candles. Now, here in this market, we're seeing this. We're seeing price was coming from top, making lower lows. You see, that's if it's to continue lower, we want to see those lower lows continue happening. But the moment we see candles take out these lower lows, and then those candles that have taken out these lower lows are also taken out, like here. In other words, this is what I'm meaning. Let me draw it here for you. Here, the market is like this, coming down, up, down, up, down. You see, the highs that have been created, nothing is taking them out, you get. Making higher highs, lower lows, lower, like that, like that. The moment you see a lower low, this one, and then another high, and this one is taken out, and then this high is also taken out, this one, just expect a shift. Now you expect price to come back here and then do what? Continue upwards. This is the same thing we're looking at. Okay? In other words, this is a market structure shift, if I'm to put it right. But a market structure shift at the beginning blocks, at the basic level, candle per candle. That's where things happen. You get? The moment you see this low being taken out, this one was also taken out, this one was also taken out, that one was also taken out. But look at the highs. The highs were not taken out. These ones. The highs were not, let me make this green for you. The highs were not taken out. So if price is to continue dipping, going down, we don't want to see these highs being done what? Being taken out. These ones. We don't want to see the highs being taken out. These ones. The moment they take out one like this, the moment this low is taken out, and then that leg that has taken out this low reverses and then takes out the high, just expect a shift. Like we've been delivering lower, now we are turning. That is the turn that I'm talking about. Just that now we are talking about it, discussing about it in a on a candle basis, candle per candle, using order blocks, not basing on the entire shift you get. So when we come back here, you're going to see the same thing in play. This is liquidity that has been taking place. You see a higher, a low, high, a low, high. This high fails to take out this one, the previous one. What happens? Price continues lower. Another low is created, high created, low created. The moment this low takes out this, and then that low that leg that has taken out all this is also taken out. That is what I'm talking about. You can see here, they have taken out all this. This move lower has also that had swept all this liquidity. This one here. This one we have placed the green candles. has also been taken out, like so. Now what do we expect? A reversal here and then a shift backwards, you get. So what do you want? Where does that reversal is expected? If you label, if you say gap there, if you see a gap, now what do you want to see? Is for price to stop where in the upper quadrant and then reverse, things like that. That's what I'm talking about. But now we're talking about, since we're discussing the order blocks, we're saying it can be a group of candles or one candle. In this case, we have two candles, these black candles that did what? That swept the previous liquidity, sell side what? Liquidity. The moment you see those candles sweeping that sell side, the sell side liquidity, and then the candles that have swept the sell side liquid, they are also being swept, sorry, taken out. For example, here, now let me just jump here. Here, for you, you can see this. Let me take it further for you. That things happen on even a lower one. Now let's look here. You see, this is liquidity, sell side what? Liquidity. Or sell stops, whatever, sell side liquidity here. Now what took that out? There is that black candle. This one, it's one now. It took it out. The moment that candle sweeps this liquidity and it's also taken out, you can see here, they also close above it. Which candle closed above this candle? This one. And the moment they close above that candle becomes automatically qualifies to be called an order block. Now what do? You mark, you label from its top to bottom. You pull that out. Or you can use lines. You'll be like, this is its top. Unfortunately, this candle doesn't have a top wick. So that's its top. This is the bottom. Now, what are you waiting to see? If you see another element in play, if you see that these candles that have taken it out have formulated a gap, have left a fair value gap, just know this is a strong a strong order block. So you mark that one, fair value gap. You get. So that is the fair value gap that has been also left. Now what do you want to see? Is your order block, you divide it into two sections. The upper quadrant and the lower quadrant. And the lower, let me change the color of the upper one. Now the green one, or the bluish, the cyan color, this bluish is down, the premium of our quadrant. The middle is the mean threshold, is the midpoint of that one. Order block, we divide it into two sections, two equal sections. Now the top section, we want to see it act as support for price to do what? To shoot up. Now what happens? Price went up, shoot up, and came back where? In this top quadrant. And did what? Boom, up. Up, it continued up, attacking what? Look here, what is here? We said price will always attack fair value, gaps, or what? All highs and what? And lows. These are the highs, but it never reached them. And then it dropped. You get. But this is the basic, like basic. That's an order block. Again, inside this order block, there are a lot of things. Oh. People, any questions before we close?
Hello, Mr. Wick.
Yes. Yes,
Thanks for
first.
presentation.
You're welcome, sir.
Yeah. Now, I'm asking about this very order block
Mm.
before us.
Yes.
It's like kind of
You're
confusing
confused.
me.
Yes.
It must have swept.
The previous.
Must have swept the one in front it, or even the previous.
Yes.
Okay.
It has to first sweep the previous what? Liquidity, the lows. In other words, it has to close below the previous liquidity. Like if it is a lower low, let this one, the new one, close below it. Now, if that new one that has closed below it, they take it out, like they another candle formulates and then it takes out its top. Just know that is out. That is another blow. Yeah. But again, on the same example, there is also this black one, the first black one. Let's look at it. This one, you can see that it also swept the previous one, liquidity. And then at second candle came one, closed above it. Now, what do you want to see in play? The moment they sweep, let me first remove this for you. This candle, this black one, the first one. Remember, price is now printing. The moment this candle takes out this liquidity here, I've shifted the green line here. It has swept. Let me zoom in. This candle, it has taken out this liquidity, and then they have also taken out it, like closed above it. This one is another blow. Now, what are you waiting to see? Is there an FVG? Is there another candle that prints and formulates a small FVG? No. What happens? Another candle comes and takes it out. You get this one. So we skip this, we leave it. We go to this one that has done one, closed below it. We shift our focus to this, to the new one, to this one. It has taken out this, and then why are we shifting to this? The moment it takes out now the previous kind of order block that failed. This is a failed order block. Why did it fail? Because another candle also closed below it, taking out its low. We don't want that. Now, the moment this one takes out its low, and then they take it out, you see how this candle failed to take its low, and then shoot up. The moment they close above it here, and then when they close above it and they formulate a gap, a small gap here, but this is a big gap. This is like a high value order block. It's like it's going to work like it's a quality order block you get off the book. Now you want to see price come back in the top quadrant and then shoot up. You get, yeah. But now you see our swing high. This is a swing high. This one, this candle. Why is it a swing high? Because that is a swing high. You can see that one. And where does that swing high happen? On the left there is what? We will talk about this structure next week. On left there is a gap that did what? That swept previous liquidity. Then in the middle, a swing high happens. Now that swing high is also closed. They close above its high with a what? A gap. Now you expect this gap to do what? This fair value gap to do what? To be retested, and then price does what? Shoots up this gap. So you mark that gap, and what do you want to see? You want to see price stop at Let me mark this. You want to see price stop in the middle. But now I want you to see in this case, in this scenario, price didn't stop in the middle. Sorry, in the top quadrant, it came back to the lower quadrant. So these things are going to happen. And you wonder why price came back up to the lower quadrant. It's not because of this gap, it's because of the order block. You get, the order block is now the most powerful here, not this fair value gap. But you can also use this. You get, where do we put our stop loss? Here, because it's if you've entered on the fair value gap. But in this case, the order block was our strong what? Point. Let me take back this. That order block. Now what happened? Price boom, one boom. Now why do we say consecutive candles? Let me leave this marked. This is a 5-minute chart. Let's drop down to 3 minutes and see. Those are the 3 minutes. You can see that. Let me drop down to 5. Sorry, to 1, and we see how these candles change. Now you see on the 1 minute, from the 5 minute to 1 minute, look at that. Why do we say, why there's someone who was asking, is seeing us like, is seeing me marking like many candles? But now, this is a 1 minute chart. Look at the candles, there are many. But when you switch to 5 minutes, this is one candle, you get. Now those 3 black candles that pushed price lower and swept what? Liquidity. Now on the 1 minute, it's actually very clean. These are almost equal, relatively equal lows. These ones. Relatively equal. Equal lows. That is liquidity or sell side liquidity. Why do we say they are relatively equal? Because they're almost on the same line. You get sell side liquidity. Now the moment this sell side liquidity is swept by what? By down close candles. It can be one candle or a group of those candles, but in this case it's a group. 1, 2, 3 black candles swept all this and it shoot up. The moment those candles that have swept this liquidity, they are also being like the high of those candles. Where is that high? Here. It's also taken out, and there is an FVG that is formulated here. You can see that FVG. Let me mark it for you. It's from there up to this week. There. Just know that is a very, very powerful FVG. What do you want to see? That order block to act as what? The upper quadrant to act as support for price to continue upward. In case you've been working on the 1 minute and you've decided to take only this last candle, this one, this black one, let me mark it for you. That one, you mark it. The moment before all this, why are we marking this last one? Because we're on the 1 minute. That candle that took out the previous liquidity sell sign, and then it was also taken out. Which candle took it out? This one, the gray one. It closed the above its what? Its high. Now what do you want to see? That one automatically qualifies to be an order blow. Now you mark its high and low. You divide it into 2. Now you want to see your entries should be on the in the upper quadrant. You want to see price come back inside this top part, the premium of that order block, and then do what? shift upwards. So this will be our premium. Then this will be our discount. So you want to see people who use this, that they maybe buy. You just put your long positions here. Short, long. Thing has also failed to show up. And then you target this high, these other highs, these other highs. You get. Now the 1 minute is actually big move. You get long. Okay, let me just do this. So if this is your long, your stop loss will be below this order block. Your entry will be in this upward quadrant. Then you target what? You target this level first. That will be your first TP. Sorry, me, I'm using white and black. Let me try to change to maybe. Okay, that is your. Let me change this to red. Like that is your entry. Then your first TP will be where? At this second high. This one here, that will be your first target. Then another target will be where? You see this FVG, this one here. That one will be your next one, FVG. So that will be your second target. On top of that, there is also this order block, a small order block. And on up here, there is also an FVG and another order block. If you label that from up there, that's your target, or even on top of these levels. So that's how you now you pull this guy here, like you go on like that. Those will be your targets. You get, yeah. But where does all this stuff start from? By looking at these data points. What are the data points? The Pdarrays. What are the Pdarrays? The order blocks, the fair value gaps. You get the old highs, old lows. Only that's what you need to know. Old highs, old lows, order blocks, or maybe fair value gaps. So there are people who are going to just use fair value gaps. That's very okay. You get. There are people who will be like, man, order blocks now are working. Like, me, I only see order blocks. It's okay. You get. But they work the same way. Yeah. Any questions before we close?
Hello, Mr. Will.
Yes.
Yes. Does it mean that for any valid order block, it must be having an fair value gap?
Yeah, a fair value gap? No. Now you see here, the last order block we marked, there is no fair value gap. The fair value gap actually happens later. You see, but it's an order block. What qualifies it to be an order block? Two things. One, it has to, if it is a bullish order block, if it is a bullish order block, you want to see it sweep the previous what? Liquidity. Sell side. Those lower lows, the candle that sweeps them. You wait now before it qualifying to be an order block. The moment it strips the previous lower lows, or all lows, or the sell side liquidity, and it's also taken out by another bullish candle. They also take it out, like by taking it out, I'm meaning they another candle that formulates, or a group of candles pushes upwards and then covers its high point, like uh, trades upwards and covering its top. The moment they do that, it qualifies to be an order block. And then your task is mark its high, middle, and lower point. Now, what do you want to see? You expect price to come back and tap into that top part and continue up. But when you see now another, like when you see a slight FVG being formulated, you just know this is now a powerful what? A more powerful order block. You get more powerful, like this. It becomes actually more powerful. You get. By more powerful, being more powerful, I mean it will respect whatever you do, what you anticipated. Like in the two examples we saw. Yes, yes, Axam. Axam raised up his hand.
It has been a mistake.
It's okay. So I think uh, today's session has been quite what? Quite a role, quite beneficial. I hope you people, you've benefited, you've picked something. So things will not be straight, like you're not going to just, these things are not going to just make sense, obviously, like right now. But when you go back into the charts and you try to look for these things and you mark them, you try to follow what we talked about, you try to mark them and see how price reacted to these order blocks, to these PDRAs. And you note that, you take notes, you make your own notes. People make you learn how to make your own notes. Then you come back to maybe Alvin, or you can post in the group your findings. That's how we're going to grow. But if you just keep these notes, and then you're like, man, the other lecture, the lessons are too good, man. They are full of information. But then you sit, and then a week goes by. And then for us tomorrow, we'll add on new information. And for you, the information is piling and piling and piling into your box, and you're doing nothing. Nothing will change. You get. So your task is try, like, at least get some 30 minutes, open trading view or any charts, or screenshots that people post in the groups. Try to zoom in on your phone and then try to look at those candles. Look, lower lows, higher highs, fair value gaps. Try to label them on your phone. Take screenshots. Ask your friend. You get. Ask Calvin. Ask Cypher. Ask who. There is 13 rounds. There are people active in the group. You see what they have to share. Things like that. That's how we grow. So don't sit on this. So let me ask who. Anyone who is willing to give us a closing prayer. Yeah. Thank you very much for listening. Either Fuzzy, anyone who is ready, like you give us a closing prayer. You can say one or two words, because all this is possible because of God. That's why we have to turn back to Him to give us courage to show up tomorrow, things like that. Yes, Regan, you're taking on this. Thank you. Yes.
Yes, sorry. Yeah, let's start ourselves and we pray.
All right.
So much for this time. Thank you for the wisdom that you give to the presenters and also the humility that you've given us to learn from them. We thank you, Father, because you are taking us from one level of knowledge and understanding to another. So the love that you've given us, we know, Father, the rain is raining and taking out people, but we are still alive we are strong and ready for the next lectures that we're going to be having. We also thank you, Father, for the time that we are having here and the knowledge that we're sharing. We pray that we shall use these things for the glory of your name and to benefit both of us. In Jesus' name we pray.
Amen. Thank you very much. That was a wonderful prayer. So I hope you stay blessed, you stay strong, you carry on that spirit, you continue with that spirit of showing up, of doing the homework, of also trying to look for these things on your own. Go back in the charts, try to make notes. You don't need to spend the entire day on the charts, just like 30 minutes each day. They will count, trust me. By the end of the month you will not even know how big you've grown. You get. So a reminder, we are not promising anyone money. You get. We are not promising you that you're going to make a lot of money from the markets. You're going to be rich. No, that is not our promise. Our promise is after the end of this program, we pray to God that you find when you look at the charts, you're able to find something, to see what you're looking for. You get to know what you're looking for. In other words, we want we want this program to help you know what you're looking for. Whenever you open a chart, you know that I want to see this, and this, and this in play. Then I'll enter. You get. That's what we're praying for. That is what we're working towards. The moment you repeat that, you know what you're looking for. In the long run, money will come. Your account will run. You will not even realize it. Our focus is not on the money. The moment you put your focus on the money, you want to see money, money, money. That is greed. And those are the 4 elements of a losing trader. You get. We want to look at the charts, and if we are wrong, it's fine. That's our target. We want to look at the charts and we do wrong things, and and the market goes against us, so that we learn. We be like, hey, that order block was wrong. Maybe let me refine like that. You go back tomorrow, you go back the other day. When you feel like it's overwhelming, it's too much, you rest like for 2 days. You don't open your phone to look at the charts. You do other things. You come back maybe like after 2 days or 3, or next week with a fresh mind. You again dig deep, look for these things. Trust me, they are going to make sense. And when you discover this and they click, you'll be the happiest. Even though you lose, you know why you've lost, and you journal that. You take notes of that. You take screenshots, and after a month or 2, you come back to those screenshots and you be like, hey, this is how much I've grown. Look where I used to make my entries. Now look how I make my entries today. You compare and contrast. You do that for a year, you know God will not leave you the same. So with that, allow me to stop here. So thank you for keeping up with us. We don't claim to be the best teachers of this. We are also still on the journey. We are also still learning these things, testing them. It's a lot to share, and it's difficult to share these things because people have tried them and they have failed. People have tried the ICT and they have failed. You get. But if we've discovered something and we've come out and we are trying, we would have kept quiet and no one would know. We do our things in silence. But we're like, this thing can help someone. We cannot grow alone. We can share this as we grow. Some other person is also doing what? Growing. And in the long run, you never know. It can add up to your income. So thank you very much. I wish you the best. I wish you a good night. We meet tomorrow. The rest we'll discuss in the groups. Yeah, Regan. Bye. So our lectures are stopped here. We meet tomorrow. The rest we'll discuss in the